September is gearing up to be quite a wild month for the cryptocurrency markets and just the markets in general. And today I'm going to be your guide and we're going to go over some of those important things happening in September, like the Ethereum merge and what could happen to its price when it does finally hard fork, Cardano releasing a hard date of when they're going to do their hard fork, the Vasil upgrade, and some extremely important updates in the economic data that really affects Bitcoin's price and the entire cryptocurrency market. So without wasting any more time, let's just get right into it. Obviously, like I was talking about before, some of the key things to watch in September is September 13th, we have the CPI data, which is the Consumer Price Index, which is going to help us understand where inflation is going. Is it speeding up or slowing down? September 15th, it's the Ethereum merge. September 16th, the Mt. Gox claims deadline, and then FOMC rate hike decision, which is when the Fed is going to decide how much they're going to raise interest rates. And then September 22nd is the Cardano Vasil hard fork. So as you could tell, September is going to be set to be a very busy month. Now, before we get into any of the news or the charts, I do want to bring up this really important thing about the Bitcoin network SOPR, which is the spent output profit ratio. Now, to put simply, just in case you guys are a little confused, the SOPR is basically, put very simply, price sold divided by the price paid. So when we're looking at this, there has only been really 3 times when the Bitcoin SOPR has dropped below this level to about 0.84. Now, the 3 times that it's happened is when we've had our late bear market, and then we've rallied up from that point. As you can see here, back in the late 2011, over here in the late 2018, we dropped very low, and then we kind of rallied all the way up. Now it's happening again. So what this is telling us is that we are entering the late bear market stages of Bitcoin in the cryptocurrency markets. So if this data is correct, then what we should see after this is we should start to see the floor being set in for Bitcoin and possibly and hopefully higher prices in the future. Now, of course, saying that Bitcoin has set its floor and it's not going to go any lower is extremely immature, and it's just probably not going to happen, especially with all the data coming out in Bitcoin and in the economy. And as of right now, US job growth has slowed in August, but Bitcoin actually gained from this. Now, the reason is because the US added 315,000 jobs in August, which is down from July when they added over 500,000 jobs. Now, this is actually good for Bitcoin because it is showing the weaker job growth in the economy is slowing down. So the economy is slowing down. It's heading more towards a recession. And that's actually good because that's what the Fed wants. That's why they're raising interest rates. They kind of want to push, not so to say like a recession, but they want to slow the economy down to bring inflation down. And with the job market growth slowing down, that is showing that the economy is slowing down, which means we're getting towards the end, so to say, of, that high inflation. But again, one problem that still arises is that there's still over 11 million job openings in July alone. And that's a problem because there was only an available workforce of around 5.67 million people. So there are way too many job openings for job or just people in general. So that kind of poses a threat to businesses, especially small and local businesses. So again, we are seeing a slow in economic growth, but yet we still have so many job openings, and that also serves as a problem. Now, when we jump over to the charts of Bitcoin, there are a couple really key things that I want to point out. Now, the first thing is that when we look at this blue zone that I have marked out, it's kind of like a really important floor for Bitcoin at the price of around, let's say, 19 to 20,000. Again, that's a very psychological number, so that's important for a lot of people. Now, what we've seen back in around 2018 when we had that bear market and how it fell, first we had that aggressive fall, and then what we really set was this fake floor, so to say, right? People fell in love with the floor of, let's say, $5,000 or $6,000 Bitcoin, and for months it just bounced off of this fake floor until eventually what happened was we broke this floor with one more aggressive move. It absolutely wiped out a ton of liquidity, took money from a lot of people going long, setting their stop losses below this point. Then the market fell, and then we finally entered that early stage bull market. Now, what if something like this happened right now? So let's take the market from right about here and then map it out. And this looks exactly like what could be happening right now. Now, not saying that this is going to happen, but this could definitely be a possibility because, again, psychologically, a lot of people are betting that the 20K floor is going to hold. And that's where a lot of people are putting their money. That's what a lot of people are putting their trust in Bitcoin's price. So what could happen is we can get a lot of people setting this floor, and then what happens is we have one more dip, who knows, maybe to 17, 15, or even 13K possibly. And then what happens is we then enter that early bull market. But again, with things like a very, very wild September coming. September is historically not a good month for Bitcoin, as it's really only had 3 green months in its 10, 11, 12 year existence. September is probably going to be a drop. We're probably going to just stall around this 20K. And honestly, I do think we're going to have one more drop below 18K at least before we actually start to see any real growth and any positive influence on the market. Now, we understand that September is going to be a very volatile month for many reasons, and one of those is the Ethereum hard fork. Now, if Bitcoin drops or it continues to fall, it right now is the leader and it is the godfather of the entire cryptocurrency market. Ethereum is basically like its little baby brother. Whatever Ethereum does, it can also control the market. Now, a CNBC analyst says that the merge is riskier than traders believe. And one of the main reasons is because a lot of people are banking on yielding or basically staking their Ethereum for, the gains. But really, there's no yield. All you're basically doing is breaking even from the inflation of the currency. So while in people's head, they think they're making the, 3 to 5 to 7% on the yield, it's really not happening because there's an inflation in the actual currency. So you're kind of breaking even. It's the same thing with the US dollar. The more they make, inflation goes up. And that's why you invest your money, so you can at least break even, because if you keep it in like a savings account, it loses money. Now, one of the things that he talks about is that while yes, it's going to be an extremely volatile day, this is one of those events where you want to sell the news. The whole adage of buy the rumor, sell the news, that type of thing. Well, we already know the rumors have come out. And if we look at the Ethereum charts, what we've seen is basically a rise in the charts because people have been buying up the rumor of Ethereum going up. So the merge has been announced. This has been a rise in the markets for Ethereum coming from this bottom to this top. It's already risen 90%. So a lot of the people who are buying in on Ethereum from, when the merge was announced or whenever the hype has been, that's basically almost 100% gain just in Ethereum alone. And that's really important because do you really think Ethereum is going to double in price once again, especially with the economy being so down in the dumps? Do you really think that all this money is going to be poured in? It's more of those things where it's a lose-lose situation because, again, Ethereum has already risen 91% at this point. We're nearing this extremely strong resistance zone, this very long-term downtrend, and at the same time, if anything at all goes wrong with this merge, it's going to be a very bad thing and Ethereum could drop. So again, what I'm expecting is short-term. I really don't see any like Bitcoin, Ethereum, or any cryptocurrencies basically being good in terms of price. And I think what could happen is eventually what we do is we get a little bit of a fake out to the top. If there's any sort of Ethereum merge fail or anything that comes bad of it, then we could get a push down, maybe down to these levels again, down to 1200 or 1000. But I would just be careful of the Ethereum merge if you're trading it, if you're investing in it. Again, long term, I think this is absolutely amazing, but short term, we do have to be careful. And lastly, one of the important things is September 22nd is when Cardano is looking to make their hard fork into the Vasil upgrade. Now, this is important because this is going to be their 5th upgrade to the net network, and this is the mainnet network, and this has already been pushed back twice. So this is an extremely important day, especially because of the criticism that comes around Cardano. A lot of people say that it's a ghost network. It has no applications. For the market cap that it has, it really hasn't done anything versus projects like Solana, Avalanche, Ethereum, Bitcoin, things like that. Now, the developers have promised greater scalability and lower fees from the hard fork. And again, you have to remember, Cardano is a competitor of Ethereum, and that's kind of its main thing, is they want to do what Ethereum cannot. Now with Ethereum merging and now Cardano kind of bettering themselves. It's going to be interesting how these two fight it off. I think Ethereum is going to win it all. But again, this is also another important thing for Cardano, because just like the Ethereum merge, what we're going to get is a very volatile day where we might get a fake out to the top. But again, you're going to be met by a lot of resistance. And again, you have to be careful of this fake floor, because what could happen is the same thing that might happen in Ethereum, where we get kind of this fake out to the top. Maybe people are already buying in right around here, and then you kind of get this fake to this bottom, because I'm sure there's going to be a lot of retail traders down here, and this is where a lot of money is going to be sitting. Now, to end this video, and something looking better for the cryptocurrency markets, is obviously Celsius went bankrupt because of their lending platform and how it worked, but they just got around $70 million as a cash relief to basically extend before they go bankrupt. Now, this is really good for the cryptocurrency markets because they were supposed to go out of business in October. Now, the longer that they can push this off and the longer that they can, figure their problems out, is better for the cryptocurrency markets. One, because if they're able to pay back everything, it's good for trust. And two, the last thing you want to see is cryptocurrency lender platforms or companies going bankrupt, because it's just not good for the entire industry or the economy of cryptocurrency. And that's exactly why Sam Bankman-Fried bought out Voyager, because he understands that if competition starts to die off, that's just bad for cryptocurrency in general. So that's everything I had for this video. I hope you guys got some value from it. I hope you saw some insight into the markets. I hope I helped you prep for the ADA and Ethereum merge. Hopefully you guys don't trade it like Wall Street bets degenerates. But if you guys enjoy the daily updates on technical analysis, news, and everything, including the data, then make sure you subscribe down below, support the channel, and leave a comment of what you liked about the video and what you want me to do differently. But until the next one, I'll see you guys then. Peace.